Okay, so in the previous lesson, we just finished talking about fear, which is an emotion that can actually stop you from getting into the market even when you see a good setup. But in this lesson, we're going to talk about impatience, which is more so an opposing emotion to fear, but at the same time can be also dangerous because it can lead you to forcing trades even when there is no setup. When it comes to impatience, a trader who tries to make money too quickly by overtrading, or who desperately wants to be in the market just to feel the excitement of the game, is destined to lose in the long run, because there's no longevity when you treat trading in such a manner. There are days that I sit in front of my charts and do not take any trade at all, but it's not like I do not take those trades on purpose, but simply because I monitor the markets and wait for the setup. So basically, as we said, you have to follow this rule: no setup, no trade. So when there's no setup, we do not trade. We do not make up setups, right? We only trade what the market gives us. With that being said, you need to learn to get rid of that get rich quick mentality and set realistic goals. Learn to limit your risk and remain consistent, because consistency is key when it comes to Forex trading. There will be successes and failures, so you need to commit yourselves to emotional discipline as well. Every trader has a position size that they cannot exceed without endangering their emotional discipline. You have to find out what is that maximum position for you, that if you trade larger, you begin to lose your emotional discipline. So you need to do some research on that for yourself, right? That is something that you need to figure out on your own, because it's different for every trader. Confidence should not cause you to become too committed to a market view. Market conditions can change at any time, several times during an active trading day. You need to adjust your viewpoint and follow what the market is doing. So never have the mentality of thinking that you know better than anyone else. Don't beat yourself up after a few setbacks that you actually end up changing the way that you trade. You have to stick to your trading rules, your trading strategy, your trading plan. You might get more aggressive after such setbacks, but it shouldn't be that way. You should trade the same regardless of your recent results. Stick to your plan. Most traders will say, let your wins run, but we usually scalp most of the time. That's why it is advisable to have at least two accounts. One will be a swing account and the second will be a scalp account. So basically with the swing account, we just trail and move our trail stop as the market keeps on going in our direction. Whereas on the scalp account, we get in a trade, make profits and get out as soon as possible. So this is a tip that you can try at least 3 or more times a day, and you will see that you end up winning most of your days and nearly even every single week. And that's how a lot of profitable traders make a living, through scalping and having a swing account. Winners come into a trade for a quick profit. If it doesn't work out, then they are quick to get out. You don't have to hold on to your losing trades. Losing traders hold on to hope. The hope that the market will go in their direction, even though the setup has been violated and the trade has basically turned against them. As you gain experience in the market, you will get a better sense of market action and the right time to get out of the market. Now, you also need to understand that when it comes to trading, you need to take personal responsibility for your trading actions. You cannot be blaming people for whatever results that come out of your trading. You alone are responsible for your results. You get to pick how you trade, what you trade, and when to trade. So the responsibility is on yourself, not anyone else. You are the reason you fell or why you succeed in trading. A sign of a bad trader is one who places blaming factors on others rather than placing those blames on himself for whatever results he has gotten on his account. So bad traders can come up with a variety of excuses for a losing trade, such as my stop got hunt, or I got a bad tip, or my broker doesn't like me. Such excuses, you hear them from most traders. Just to remind you as we end off this lesson, losses are inevitable when it comes to trading. You need to learn to handle them without getting down on yourself or blaming external factors. So with that being said, that's it for this lesson. Let's move on to the next lesson.